Corporate fixed deposits. Interest rates across the world are inching higher, but bank fixed deposit rates are moving up at a snail's pace. Meanwhile, it's the corporate FDs that continue to offer higher interest rates to its depositors. Therefore, should you consider these corporate FDs, who are notorious for being highly risky investments avenues, or should you stick to traditional tools like bank fixed deposits? Now, to explain all of this and the pros and cons of corporate FDs, I have on board Mrin Agarwal, founder director Finsafe. Mrin, good evening. Welcome to the show. So, Mrin, let's start with breaking down as to what are corporate FDs. A lot of people don't actually understand the difference between bank fixed deposits or corporate fixed deposits. A fixed deposit is a fixed deposit for them. So, let's break down. What is a corporate fixed deposit?
So good evening, Kavita, and it's lovely to be on your show. So yes, corporate fixed deposits are very different from bank fixed deposits. Of course, the working is the same. So it's a fixed amount that you invest for a fixed period at a fixed interest rate. It's just that these deposits are not issued by banks. They're actually issued by companies. Typically, the companies that issue this could be a manufacturing company, or let's say a NBFC, which is a non-banking financial companies. These are typically the ones who come out with the corporate fixed deposits. Now, again, as you mentioned, these do give a higher return compared to fixed deposits, and the period could be much longer. It could range from 1 year to 10 years. Of course, you also have bank deposits in that range. An important aspect of corporate deposits is that all of them have to be rated. So you typically have ratings like AAA, AA that are available on these deposits, which show stability of repayment. And of course, the interest can be paid on a regular basis or it can be cumulated. So they're very much like bank fixed deposits, but they have two big differences. One, that they are issued by companies and not by banks. And two, in case of banks, you have the deposit guarantee insurance up to 5 lakh rupees, which is not there in the case of the corporate fixed deposit.
All right. I can see that you've given the name of few corporate FDs, which viewers and investors can actually look up for. We'll flash those rates and those company names on screen as well. But then help me understand, Rin, why is it that corporate fixed deposits interest rate is higher than a bank fixed deposit?
Well, it's simply that the cost of funds for these companies tend to be higher. They have, companies, banks versus companies, their ability to raise money from different sources is different. And that's why the companies are willing to give you a higher return for your fixed deposit.
You just mentioned about the tenures. It starts from 1 and it goes up to 10 year. But then let's talk about the risk element, which is like the prime reason one should actually cross-check, verify, and then take a decision of investing their money or locking their money in a corporate fixed deposit. The rating matters a lot over here. I heard you mention in the first answer that there are ratings, different type of ratings given to different type of corporate FDs. So let's elaborate on that, and what kind of rating is actually trustworthy, and you should be accepting that rating to lock in your money in a corporate fixed deposit.
Well, I think AAA and AA is okay. And I
Okay.
think what is really important is that you also need to see the pedigree of the company. Here I would just like to point out that today there are various other bonds that are available, which a lot of people tend to equate to corporate fixed deposits. So these could be like covered bonds, or for example, you have a lot of other bonds available on various online bond platforms. And the way they are positioned and marketed is that these are like corporate fixed deposits. However, a lot of these come with very, very low ratings. So I think anything below AA is a strict no. I mean, I am seeing bonds, triple B bonds, which are being actually positioned as corporate fixed deposits. So I just wanted to caution investors about this. Please stick with AAA and AA, and it's very important to understand what is the pedigree, what is the stability of this particular company before you invest into this company.
Important point that you highlighted. Thank you so much for that. But then also now, since we are in the rising interest rate scenario, when a lot of bank fixed deposit are already offering you interest rate up to 7 or 7.5%. Now, if you look at the corporate fixed deposit also, they are slightly higher, almost 8% in certain cases. But do you think they will really catch up and we will see a time where bank to fixed deposit and corporate fixed deposit are almost the same kind of interest rate that's been given?
I doubt that because typically there is about, I see 0.5 to 2% difference between the bank and the corporate fixed deposits. And I mean, from what we see, I think, we are, well, I would not say at the end of it. I mean, we still have some more rate hikes to go. But, I don't see it like really jumping a lot ahead from here. So to that extent, yeah, maybe 8.5 is what you'd be able to get on a 3-year deposit, maybe going forward. But again, I think, it really depends on how the whole macroeconomic situation plays out.
Explain us the tax implications. What's going to be the net interest rate, your net interest takeaway?
So these deposits are fully taxable. So it means that if you are in a 30% tax bracket, so for example, if a deposit is giving you 7% return and you're in a 30% tax bracket, it really means that you're making 5% net. So it's fully taxable as per the tax slab.
All right. Any senior citizen angle to it that we see in normal bank fixed deposits?
No, I don't think so.
Tell us something right now, looking at the rising interest rate scenario, till how long you should park in your money. For example, you've checked in all the parameters, okay, you've tick marked that. But then what should be your time horizon for locking your money in a fixed deposit, in a corporate fixed deposit?
Well, again, I would strictly go with a AAA
Sure.
deposit, and I would right now want to lock in only for a year because when you look at bank fixed deposits, you have premature withdrawal that's available. But in case of corporate fixed deposit, what happens is that there is a minimum lock-in period, typically about 3 months, and then you can withdraw with stiffer penalties. So, it's just that the premature withdrawal process is not as smooth as it is with the banks. And again, given the fact that we do have some rate hikes still left ahead, I would still say that the maximum period I would lock in for right now would be a year.
What's exactly the premature withdrawal penalty that we're talking about?
So typically with the corporate bank, I'm sorry, with the corporate deposit, what happens is that there is a minimum lock-in period of about 3 months, in which you cannot remove or you cannot withdraw the funds. And after that, if you want to withdraw it, there could be like a 1 to 2% penalty that could be there. It really depends on how it's been structured. I mean, there are cases where they also don't pay the interest. So in a bank, it's very clear. Typically, the premature withdrawal is at a maximum 1% above the rate of interest of the deposit. But here it could be higher by maybe 1% or so. It could be higher. So certainly, the penalties are stiffer. There is a lock-in, unlike a bank deposit, which is easy, which can be withdrawn very easily.
Deposit insurance also, right?
Yes, that's the other big one, of
Yeah.
course, that you do have up to 5 lakh rupees of deposit guarantee insurance that's available
Mm-hmm.
on bank deposits, which is not there on the corporate fixed deposits.
All right, I think that will be all. Thank you so much, Mrin, for bringing out important points on investing in a corporate fixed deposit.